That's how it ended up. GM. GM. What a day, huh? And funny, after all of that, that's how it ended up. It seemed a lot crazier at the time, didn't it? But where do we begin? So, a few things. Bitcoin shakeouts. I won't I won't go over this too much, as I talked about it on the stream yesterday and I talked about it on my daily lessons, so check those out. These kind of moves happen in bull markets. I mean, this isn't the first one we've had. There's one here. Uh, Last one I remember, there was one here. Deep shakeout, mid pump. There was one here. There's a bunch of them around the ETF. There's a big one here. There was one here, this flush. Then everyone reloaded. Then the second flush. Then this one, all the way up, and another flush. Super, super, super common in a bull market. And we're in a bull market. So I talk about not using leverage. I think that's pretty clear by now. And when we say don't use leverage, it doesn't mean that you can never use any leverage. Leverage is a tool so that you can have capital efficiency. And I guess I'll do a little bit of a talk about that. If I'm long Bitcoin, if I buy Bitcoin, right? Let's just say, for example, I bought Bitcoin at 30K, right? If I bought spot Bitcoin at 30K, now I'm fully long spot Bitcoin. And I'm a swing trader or a position trader. And I wait and price comes up and it's rallying up. And now my 30K Bitcoin, let's say I bought one Bitcoin, now it's worth 48. Wow, cool, I'm up. I'm up a lot. Then price dips down, all the way down to below 40, right? And I get a signal that we went below 40. We held the 100 EMA on the daily. We broke back above, and this daily close, that closed back above the pivot level, back above all of this, triggered a swing trade long. And the target was this pivot at 58, right? Let's just say, for example. That's then a trade where you take 1% or 2%, whatever your defined risk is, once you're past blue belt stage and you're starting to scale up, or if you're already trading, you take a percentage of your portfolio and put it on a risk defined trade. Now, if you're fully long Bitcoin, you can use portfolio margining on Bybit or Binance. All the exchanges pretty much have it. Or you can use the inverse perps, where you use Bitcoin as your collateral. But you are putting some of your Bitcoin at risk. But you're putting some of your unrealized profits at risk. This is the way that you're supposed to trade on top of your portfolio balance, if you're doing it that way. Right? That's one way. The second way, which I recommend, is that you do 80% of your portfolio in spot. Now, it doesn't have to be all in Bitcoin. You can choose altcoins if you want as well. That's up to you. But I'd say once you go outside of Bitcoin, you need to do a lot of research, because not everything goes up, right? If we have a bull market, Bitcoin will go up. Bitcoin's the biggest and the best for a reason. But you put 80% of your portfolio in there, maybe even 90 for some people, and you keep 10 or 20% on the side. And so if that 80% was, 8 grand, and then you've got 2 grand on the side, then out of your 20%, you're taking a trade over here. And you might use 1 to 3% of that portfolio, whatever. Like, again, it's out of the 20%. It's not out of the 80. The 80 stays. But you're trying to then take your 20% and grow it. Now, there's two ways you can do that with your 20%. So with the 20%, and hold it in dollars or hold it in BTC, right? The 80 you never touch. Just take it, buy the Bitcoin, take it off the exchange, put it in your cold wallet, put it in a trust wallet, an encrypt wallet, whatever, and just leave it there. Let it do the work for you. With the 20%, you will actively trade it. The goal with the 20% is to outperform Bitcoin. Otherwise, you should just hold Bitcoin. So you can hold it in dollars and then take trades, right? A 1 to 3% trade here. And that's where you use leverage. You would use leverage so that you can get the correct position size so that this 8% move, if it goes down there, would hit your stop loss and you would lose 3%, 2%. Let's just say 1% for the ease of calculation. So if this was 8K, right, you put 8K into Bitcoin over here, and let's say your 20% was 2K, you could put 1% in here, which would equal 1%, which equals $20, right? It's just for argument's sake. That would mean that you risk 20 on this trade. And you risk 20 to make about 100 almost, 4.8. Let's just put it to 5 just to keep things really simple. So you're risking 20 to make 100. Then the idea of your trading is that over time you do this a bunch of times across different time frames, different systems, different coins, whatever you want to do it, so that you gain excess returns, and then you can either choose to keep those returns in crypto, right, in coins, or keep them in cash, whatever you want to do. Now back to the point with the 20%. It's your choice whether you want to hold the 20% in dollars, which means there's no underlying asset appreciating, or you could hold it in Bitcoin. So in his hypothetical example, if you put the 20% into Bitcoin here as well, but kept it in the separate exchange, like kept it in your exchange account as a trading balance, or kept some of it on the exchange, you don't have to keep it all on. That's why we use leverage. You could keep 95% of your total money off exchange and just put 5% on and trade with that using leverage. That's why we use leverage. So you don't have to put your money on the exchange. And if you do hold it in Bitcoin, you have the benefit that if it's going up and it's a bull market, you'll make more, right? Your trading balance will appreciate just by being in Bitcoin. But the downside is also there, right? If you don't buy at the right place and price goes down 30%, your trading balance will drop 30% as well as your holdings. So that's a decision you have to make. It's not like, oh, let's just put it all into Bitcoin and that's, all things are rosy and happy and everything's great. There's always downside, there's always risk. But without risk, you can't trade. So when you've got then that balance, if you do hold it in Bitcoin, you need to understand something. If you just hold it in dollars like this, you risk 20, you make 100. If you lose $20. If you do this with your Bitcoin balance and you lose equivalent of 20, you actually lose some of your Bitcoin. Right? And of course, then if you win again, you'll win back some Bitcoin and more. But be mindful that you are going to lose your actual Bitcoin from the 20% as well, just the same way as you'd lose dollars. And that's a different calculation in your head because $1, right? If you lose $20 now, a year from now, that's still $20 you lost. In fact, it's probably worth slightly less because they keep printing money. It's probably worth $18 or $19. But if you lose $20 today and Bitcoin triples by next year, you've actually lost $60. So you have to factor that in. Again, I have no problem with people who want to hold their trading balance in Bitcoin. I think you can get exposed to the bull market that way as well. But the point of leverage is not to be like the fact that you cannot even see that dip on this chart. You should not have had any leverage trades on there unless they were like day trades, right? The time to use it on top of your portfolio is at corrections or dips or when your system is telling you to. Now, maybe you've got a lower time frame system, which again is totally fine. Like if you were in a trade yesterday at any point, it should have been like somewhere over here after this dip. You're getting long after it flushes below and then there's a breakout here, break a structure. Maybe you get long, put it below the impulse candle. Hopefully there was a reason to take profit somewhere on the way up here, right? Not being greedy. Or hopefully like your systems would say so. Because if not, you would get stopped out. Big flush down, stops out all those people, right? If you had your stop loss there, you wouldn't have got stopped out. You'd still be long. Again, these are all hypotheticals, but the only place yesterday to be long would be after some kind of shakeout, right? Where you're getting long somewhere on the way up. To have a long open or be opening longs anywhere up here is just suicide. You can't be adding longs into parabolic up-only moves. But if you did, and this goes to people who are trading with systems, if you were long for whatever reason following a system over here, That's fine because you should have had your stop loss probably very tight. Your stop loss shouldn't be down here if you're getting long up there, depending on obviously your time frame. It doesn't mean it's wrong, right? It might mean that your system's giving you entries at bad places, but if you entered for any reason systematically, then trust your system. It's only, and don't allow one trade, right? If you opened a trade yesterday because your system said to go long and you got stopped out, it doesn't mean the system's bad or you should throw the system out. If you've back tested it and it has positive expectancy, then you have to try it in real time to see how that works. One trade does not equal a good or bad system. So that's one side. But if you entered along without real systematic reason, then you FOMO'd. And just admit that to yourself. That's fine. It happens to us all at different times, especially when you're new. Look, what's done is done. But just promise yourself and commit to yourself that it won't happen again. Because the only way to survive through a bull is to have the majority in spot, so you cannot be liquidated. And it's so forgiving. Like the best example here is this. If somebody FOMO'd here and bought spot, guess what? They were in profit briefly, big flush, but they didn't sell, didn't panic, didn't close, already back in profit or at break even. Already. This is not even 24 hours. This is about 15 hours later. You're already back in profit or at break even. The bull market is so forgiving to spot holders. It's so forgiving. You can see this. You could FOMO in at the absolute pico top on ETF day. And 30 days later, you're at break even. And then you're in not just break even, you're in 30, 40% profit. Right? So, spot, please. Spot only for the vast majority. And if you're going to trade your systems with predefined risk. Even if you took a rushed, silly trade yesterday, but you used 1 to 3% of your 20%, right? So your 80% is never touched. Your 20% trading balance, you took 1% of that. So overall, this is only like a fraction of a percent of your total net worth, and you get stopped out, you lose. That's fine, right? Losses are part of the game. Survival is the name of the game. Every single day, there is a new market. Every single day, there are new opportunities. If you get too aggressive, start to FOMO, start to think that the market's going to run away from you, that you're not going to make it, that you need to add leverage, you need to try and make it faster, the only thing you're really going to do is end up losing faster. And I can guarantee that. Because that's the mindset of how losers trade. It just is. So really can't be, I cannot stress enough how important that is. So back to today, Bitcoin is grinding up on the 1 hour trend, which is holding here. So unless something changes with that, I'm going to just consider Bitcoin to be continuing in this strong parabolic upslope with the 1 hour bands holding. Hasn't even touched the 4 hour bands yet. Maybe touched 2 hour bands. Yeah, touched 2 hour bands, but I stick to 1, 4, 6, 12. 15 minute, we lost it briefly, reclaimed it, but I would say this 1 hour slope is holding up pretty well. So we had massive volume. Now the volume was super high on ETFs yesterday, like insanely high, to where it was triple the average day. But a lot of that, of course, is because when price moves so much, you're going to have a lot of trading, right? Buying and selling. For some reason, it's not here. 28. I don't know why it's not showing up on this. That was the 28th, but it was more than 3 billion. Fucking tell you that much. It was over 9 billion. There, 9.87. So it must not have added on yet. Anyway, huge. 9.87 billion, right? And the days before that, which were big days, 3.8 and 3.8. So we've had an enormous day. The flows were absolutely huge. That's not the right day. That's 27th. It's not showing. It's not showing IBIT. Yeah, it's not showing up yet on this, but it does on far side. So BlackRock 600 million, just BlackRock. That's their biggest day. Excuse me. That's their biggest day yet. following on from their biggest day yet. So Tuesday was the biggest day they had at 520 inflows, and then Wednesday was even bigger at 612. Huge. Yesterday had big grayscale outflows, 200 million, but the net of all of them was 673 million, which again is the single biggest day of inflows. So this market is accelerating. The flows are strong. They're adding and adding and adding. It's huge. It's really big. Now, it remains to be seen where Bitcoin goes from here, but this to me looks like a lockout rally, meaning there's no significant dip and it's going to make a run for all-time highs, probably with no significant pullback, because that was a very significant dip. I don't know if it's is it going to pull back and correct more deeply now, whenever it's just a stone's throw away from the all-time high. I would say with that momentum and with the shakeout that happened, it's probably got enough new buyers, flushed out the leverage, got new buyers to make a run for all-time high. Don't know. We'll see. Money's been flowing into alts, overnight. So it remains to be seen how the flows go today. Bitcoin pushed right back up to this dominance high and hasn't broken out yet. It's right up to that breakout level. So we'll see what happens today if traders switch focus back to Bitcoin or if they keep chasing into alts. But yeah, a lot of alts got nasty wicks yesterday, like Injective, which I'm long at the moment. Really good. Like, look how good Injective is today. Look how strong it looks. I got long Injective at 39.40, 39 to 40 level before the wick. The wick comes along, fucking sweeps out, but before I even have a chance to check the chart, I'm back at break even. But anyone who used really tight stops here and here and here, trying to be hyper leverage greedy, just got wrecked, got taken out. Anyone who didn't, who had their stops below the big invalidation levels, is sitting fine. We're in profit here. Solana starting to break out. I would have liked to see. I haven't got into Solana yet or Bonk that I was talking about. I want to, but my plan was to trade them closer to the 13th of March, which is the ETH Denkun upgrade. Market doesn't have to do what I want it to do, so I've missed my chance to get into Sol initially. I don't think I want to buy into the first breakout because often that can be a false breakout. It might not be. I wouldn't be surprised if this breakout just continues and holds, but for me, I'm long Bitcoin, long Akash, long Injective, long Pepe. So, I've got plenty of exposure here. I don't need to add any more. Pepe itself is lagging, but lagging after a massive run. So I'm watching mostly the 4-hour bands to hold. It hasn't touched them yet. So I'm seeing if Pepe will consolidate around here. And we'll see. If it can consolidate up here, I think it's going to make a run to that all-time high. All-time high for Pepe is only 44 area. Not far at all. It's just here. And let me see. There we go. All-time high. Just not far away at all. And I would expect probably a pretty short, shallow reaccumulation to go for the highs if it is going to. Obviously, there's a chance that it stops here. However, I think the momentum is going to continue and carry it to that all-time high because that's really where, to me, that's where the FOMO will begin. There's quite a big wick on yesterday's candle, but as long as it remains at the 4-hour bands, I think Pepe is going to be fine. My invalidation for Pepe would be a 4-hour close below this level, right? So the previous 4-hour structure level, which is what, around 26.0026. That would be like my invalidation on Pepe. I got long at 17, wherever 17 is. I got long some down here, and then I've added a bit up here. I don't have a full size position on Pepe. I've got about 50 to 60% of what I would like to have, but I'm not going to add any more. I'm just going to leave it now, unless I see some kind of consolidation. But to me, I'm happy enough with my positioning on Pepe for now. And outside of that, we'll take a look at some of the others. ETH daily candle again look great. Like these are not topping candles on ETH or Bitcoin yet. Like they both had really strong reactions. At one point, like if we go back and if you look at the replay, right, this was at one point setting up for a really potentially bearish daily close for both of them. And so as you watch ETH, there we had like at one point, oh, why is it not showing? Trying to see, let me go to, I guess I'll go to the 4-hour chart. We'll look at how this was developing throughout. Because obviously with all the coins, it's at a certain point, we had some pretty nasty looking wicks there, right? So at one point, it was looking really bad. Ended up reversing and having a nice close, and there we go. So obviously, this is accelerating, and this is closer to a top than to a bottom. And I think for Ethereum, it seems to me like Ethereum's going to tag that liquidity. And when it does, that would be to me, that's a pretty obvious place for it to top out and reverse. So I wouldn't be surprised if we see a push to 3620 or 3700 area. And maybe from there it cools off or goes sideways or whatever. But this is one of those lockout rallies, they call it, right? Where it basically is up, 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 no pullbacks. It's really frustrating people because they can't get on board. Right? Just 2 weeks ago, Ethereum was at 23. Now it's at 34. It's like, how do you get on board? There's no dips. There's shallow dips. And when we dipped over here, I said, this is like when Ethereum is pulling back in there, like, it's probably one of those dips that doesn't dip very deep, and away it goes. That's just the nature of these moves. So if you're not on board, you just have to wait, right? If you're buying spot, like I talked about this a couple of weeks back, like I think it was on this weekly close, that was a confirmation that Ethereum is going to run higher. And if you buy spot, you'll be in profit after whatever time. It doesn't mean there couldn't have been a pullback first, but such a strong weekly close would indicate higher. But adding longs, leverage longs on top of that, the only type of longs you can take in this environment are really short term, like day trades, because any type of swing trade, like the best swing trades you'll get will be some kind of dip into even at least the 50, let's call it the 50 EMA on the 4-hour. It's just not it's not even came close to that yet. But it will, right? At some point it will. It maybe overextends, comes back, has a crash down, starts to consolidate, and then goes higher, right? And comes into those bands. That's where you don't want to look at adding actual longs after it's taken people out, had a 15% pullback or whatever. Maybe grab this liquidity down here, something like that, if you're going to actually look to add longs. Otherwise, you just stay spot long. Yeah. Violence, absolute violence yesterday. Total liquidations were not insanely high. They weren't very high on Bitcoin. As we talked about this, we've got a Bitcoin-led rally, and it's spot-led as well. So when Bitcoin's leading sorry about that. When Bitcoin's leading and spot is leading, the total liquidations yesterday were super high on the short side, over 160 million Bitcoin shorts wrecked. But on the long side, only 80 million, and alts about 200 million. So a good shakeout on alts, a very, very decent leverage shakeout on alts. And Bitcoin seems to be, with the ETFs and all, continuing strong. AVAX must be breaking out. Yeah. Or not breaking out, but moving up towards its highs. And yeah, so this now looks like, alts are having a run. Let's look at total 3. Yeah. Alts breaking out the new highs again after a dip. So probably a bit more upside to come on alts before a consolidation. So I wouldn't be surprised if it just pushes a little more and then goes sideways. It could have a deeper correction or could have a shallow sideways. But, when you have a dip, a leverage shakeout that gets bought up and price pushes higher, it really FOMOs people into getting long and long and long again and buying into these breakouts. But on the low time frames, it's setting up for pullbacks. Right? Again, the dip was bought. We're pushing higher. It's probably going to accelerate. It's probably going to go higher before it goes lower. But you have to stay patient, remain calm. Here was your dip to buy, right? Here was your correction. Corrects into the bands, holds them, goes sideways, chops. Then it accelerates from 530 all the way to 620. Like, this is not the time to be adding longs. You have to have patience. Wait for either a decent correction like this that usually has multiple pushes, like here, 1, 2, 3 pushes and reaccumulates. Even over here, you had 1, 2, 3, 4. You had a bunch of test, and holding. Then it starts to climb up again. Same thing has to happen here. You have to wait. You're looking at where price is now. Where price is now is more like this, or this, or this, right? It's accelerating away from the bands. It's not a time to be adding a bunch of risk. Certain coins are going to run really hard. They always do. But you have to have patience and stick to your plans and your processes. Okay? That's it. GM. See you later on the live stream. All coin requests today, 5 p.m. UTC. We'll go through a bunch of charts. GM.